may we be upstanding for the national anthem.
Stand and sing of Zambia, proud and free, land of wealth and joy in unity, victors in the struggle for the right. We won freedom's fight, oh, one, strong and free. Africa is our own motherland, fashioned with and blessed by those who blend. Let us, all our people, join as one, brothers under the sun, oh, one, strong and free. One land and one nation is our cry, dignity and peace in Zambia's sky, like a noble eagle in its flight. Zambia, praise to thee, oh, one, strong and free. Praise be to God, praise be, bless our great Zambia, Zambia, Zambia. Remain we stand under the flag of our land. Zambia, praise to thee, oh, one, strong and free.
We may remain standing. We will have a prayer from Mrs. Maria Maonde.
Heavenly Father, we thank you for today. Shall we pray? Our dear God, we kindly ask you to be with us today as we make the wise decisions for our economic growth and stability. Heavenly Father, we ask that whatever we make today, it may be of use to every Zambian. Heavenly Father, we ask for clarity and understanding for everything that we are going to listen today, for this is a very, very important day. In Jesus' mighty name we pray, with thanksgiving in our hearts. Amen.
Thank you very much, Maria. We may be seated. The governor, deputy governors, members of the Monetary Policy Committee, directors here present, members of the press, ladies and gentlemen, I welcome you to our second Monetary Policy Committee press briefing for the year. As you may already be aware, the Monetary Policy Committee was hosting its meeting on Monday and Tuesday, and this morning the governor will be announcing the decision of the committee. A big thank you to Zambian Monitor for streaming this briefing live on your page. To our online audience, we acknowledge your presence. Thank you very much for joining us. Allow me to introduce to you the dignitaries in front of you. We have the governor, who is flanked by his two deputies. Deputy Governor in charge of operations, Dr. Francis Chipimo, on his right, and Deputy Governor in charge of administration, Mrs. Reka Chifue Muhango, on his left. Next to Mrs. Muhango, we have Director in charge of research, Dr. Jonathan Chipili. Next to Dr. Chipimo, we have Acting Director Financial Stability, Mr. Goodson Kataya. Without wasting much of your time, I will at this point invite the governor to address the press. Governor, sir.
Allow me to warmly also welcome you to this fourth MPC press briefing. It's the second MPC for the year, but the fourth in the series of MPC briefings. the deputy governors, directors, Bank of Zambia, fellow colleagues from Bank of Zambia. I should have actually started with the committee because they are the ones who have empowered me to speak here. So fellow committee members of the Monetary Policy Committee, members of the press, ladies and gentlemen. The outline for today's presentation is as displayed on the screen. I'll start out as always with the decision of the committee, followed by some information on inflation outturn and how we view inflation going forward. Then we look at the foreign exchange market because of its intricate relationship to the subject of discussion. Then we look at credit developments, economic activity will follow, and I'll then present a conclusion. The committee at its meeting of Monday and Tuesday, yesterday, decided to raise the policy rate by 100 basis points to 13.5%. This was informed by a number of factors. Even at 13.5%, you note that it's still below the inflation, which is around 13.8%. So calibrating it to that level was a subject of intense discussion and the poring over information to see how best we could move forward. What the committee noted was that inflation has continued to move away from the target band of 6 to 8%, which is what is given to us as the target to aim for. We also noted that there is a persistent rise in inflation expectations, which, if left unchecked, are poised to undermine macroeconomic stability and efforts towards robust and sustained economic growth. Now, we say expectations. What we observe onshore and offshore is that players think that inflation will continue to rise. So we have to arrest that kind of expectation because it tends to self-fulfill if left unchecked. We made projections too of inflation over the next 2 years, that's 8 quarters, and that projection indicated that inflation will average 13.7% in 2024, and then, which in effect is higher than what it was when we last met here in February. Now, this decision should not be taken in isolation. It's taken as a complement or a supplement to earlier decisions or actions that we as a monetary authority, along with the fiscal authorities, have been implementing. So everything that we do is connected, so you might say. Now, what we observed is that inflation is currently very much driven by what is happening in the exchange rate market. It's also driven by what is happening in the food sector, especially maize grain. In this presentation today, we'll try to show more granularity in how the basket that we are looking at is made up. Now, when we look at the outturn of inflation, we see that it has risen to 13.5% in the first quarter of 2024 from 12.9% as indicated in 2023. In April, which is after the quarter's end, inflation increased further to 13.8% from the end March position of 13.7%. Now, let me just turn to the table. As always, this table is in two parts. There is the upper part and the lower part. So what I would ask you to look at closely is firstly the first part, which is the upper part, which talks of average inflation. So if you look at the second row, which talks of overall inflation, you note that inflation has actually been rising since Q1 2023. Now, when we look at the subcomponents of that overall inflation, which is food and non-food, you see that the food has persistently been rising as well from over the same period. For non-food, there was a bit of a break, but it's also showing an upward trend. Now, if you look at the bottom side part of the same slide, which we talks of end period inflation, we see a similar kind of story being told. It shouldn't be different anyway because the other part is derived from this, but sometimes there can be differences. The average can deviate from the individual end period numbers. So, but what we are saying here is that inflation has been rising. So in our decision-making process, this is one of the key factors we look at, and then look at what will be the outturn for inflation over the next 8 quarters. And then we look at what risks underlie that projection. So from outcomes, inflation is showing an upward trajectory. Now, what are the factors that underlie this? As I indicated, the currency is a major factor. Rising prices of food, maize grain, maize products, and vegetables, and energy, fuel here in terms of the pump prices that we see. So these are the main drivers we see. Now, vegetables, usually around this time of the year, we should have more vegetables. But I think we have noted over in the recent past that this is not happening anymore because we seem to be using every available piece of land to put buildings. So people are no longer growing backyard vegetables, which puts pressure on the supply that comes from elsewhere. So this is a new phenomena that we need to look at closely going forward. Now, I said look at the components more closely. Sorry, this is quite cluttered. You may not be able to read what it is showing. What we are trying to show here are the various components of inflation, the basket, the CPI basket. So on the left side of the screen, we have the contribution to overall inflation by product in the first quarter of 2024. In the second slide, there was chart, we are looking at the same phenomena, but this time over the month of April. So one is for the quarter as a whole, the other one is for April. I think when we meet in August, we'll be able to show the full quarter out 10. But for now, we are showing what it had been in April, which is the month of April. The longer bar on both sides is reflecting the prices of breakfast meal. So you can see that is quite a dominant factor in the charts. The next bar on the quarter one, just below the first one there, that's roller maize meal price. But when we come to April, the second bar is not roller maize meal, it's overtaken by charcoal. And you can see the struggle which is there. One, in a bid to deal with the environmental issues, there is a ban on the use of charcoal, but that pushes the price up as now more people want it. So it's a trade-off that we always have to struggle with. The third bar is on the left one is maize grain, but on the right is where now we have roller maize meal. So at your own time, I think you go through this and appreciate what forms the basket that we are looking at. But of significance here is that much as we say that food may be purely a supply side issue, because sometimes people have raised questions as to why do we worry about food when this is just a supply side matter. We should be more concerned with the demand, because that's where our tools are best suited to address. Now, the point is that when you drill down to see some of those components, you see that they are imported items as well, which form part of the food basket. So when the exchange rate moves, they also move. So the issue of exchange rate, how it affects different aspects of the economy is quite wide. And that's why I think it is important to appreciate the need for that variable to be under control. But it's also influenced by a lot of factors, some of which may not be entirely under the control of the central bank, but influenced sometimes not even by the country, our country that is, but coming from external sources. So all we urge in this, why do we need foreign exchange? We need foreign exchange to import some of those things. Now, the question is, are we going to continue to import these things, or we can produce some of those, which is the import substitution, in which case we save some of that foreign exchange that we have to spend. So that gives you an idea, even at a personal level, perhaps where can you try to come in to do something. But the point is that it's not purely a supply side issue. There are aspects of the demand side through the exchange rate channel, as you will see later or as we talk in other variables. So I thought I should spend a bit of time on that one to explain that. Okay. Now, when we move on to the outlook for inflation, during our last MPC, we projected that the inflation will remain above the target. That's what our projection was saying. In fact, as you see shortly, it was actually above the target. This time around, what we see is that it's above the target for the most part of the forecast horizon, but as we move towards the end, it actually gets into the target range. Let me just show that immediately. So if you look on the chart on the screen here, the chart on the left, the yellow line or the orange line, bar, that's the target that we have. Clearly what you see, the heavy line, which is not dotted, is showing actual inflation. Where you see there now, we get two dotted lines, one which is red and the other, I think, green or blue, depending on your eyesight. If you are good at color schemes, you may see the green, but some of you like me may be seeing blue from this end. Anyway, the point is that if you look at the red, this is the projection we had when we last met in February. You can see that inflation was actually staying outside the target range throughout. Come this time, we make a similar projection, which is now the other line. You see that it's elevated, it's higher than what inflation projection was the previous quarter, but it drops to the target range towards the end of the forecast horizon. Now, the issue we are dealing with now is this intervening period. If we don't do anything, this could actually move even further away. That's the issue that must be taken into mind. Because people may say, well, if it is coming down, why are you concerned about that? But the point is that there are so many risks that are at play here that if we don't address the inflation expectations that I referred to earlier, this may not actually come about. It could even move further up. So this is the trade-off that we have to do. It has also to be borne in mind that this action we take is short-term action, which we review every 3 quarters, every quarter when we meet. What do we do based on the evidence that we have before us and the projections that we make. So if, for example, we find that based on the actions that we are taking, we meet in August, this has moved closer to the target range, then we'll make a different decision. But where we are now, we see that it's way too elevated from our target band, and we cannot just let it be. More importantly, the driver is so pervasive, as I indicated, one of the drivers, that is the exchange rate. So the exchange rate will also affect the importation of food items that we are expected to do because of the drought that we are experiencing. So it comes in different forms. It will affect the budget as well, in that now you have to come up with more kwacha to buy the same dollar and import. So these are some of the things that we have to grapple with and try to strike a delicate balance on how you manage this. Each one of them obviously has got its own pluses and minuses, but inaction is not an option in our case. The table there is just putting in number terms what the charts are showing there. So if you want to see the numbers, look to the table. But if you want to see the graphical representation of the same, just look at the chart. Okay. Now, in the foreign exchange market, which I've talked about, we saw that in the first quarter of this year, the kwacha depreciated by 10.6%, slight moderation from what had been the case in the previous quarter. In the previous quarter, it had depreciated by 17.5%, but still a depreciation of 10.5% is quite significant in a quarter. Now, what we see as the driver of that depreciation is by and large the mismatch between supply and demand. Supply has not kept pace with the demand that is there in the market. Maybe next time we'll show you a chart which shows it's literally like mountains. When you look at the pipeline of demand that shows up sometimes, and then you see that translating into the kwacha moving. So the graph there is just showing you graphically how the kwacha has behaved against some of these major currencies. Now, let me just move a bit to supply. Has been now more or less been tied to what we get in terms of taxes, mineral royalty, and other mining taxes. So what we show on the right here is what has come through. You note that the bars are getting shorter, which means that the supply is reducing. Meanwhile, demand remains elevated. So that mismatch on and by itself does lead to a movement in the exchange rate. Now, to try and moderate the volatility that we see in the market, like I said last time, when you are seeing the rate that is posted is a rate which has benefited from some of the actions that we undertake. If you were to see the intraday dynamics that go on, you'll be really seeing that there is quite some movement that takes place. So, but reading that, we take action to moderate that fluctuation. We also note that there are commodities which are of an essential nature. For example, oil, fuel imports. If those are not facilitated, then you begin to see shortages of fuel. We also have to be alive to the fact that we don't produce all the medicines that we require. So those have to be imported. We still owe people money. Yes, there is debt restructuring, which we're talking about, but we have not stopped servicing our debt to the multilaterals. That's the only way they can also continue to support us. So all that requires the use of the foreign exchange that we have. So to help the market breathe, we provide some augmentation by way of putting back this into the market. But sometimes that is not sufficient, so we kind of get the projected amount from the reserves with a view that we are going to recoup from the next period. But as you have seen, this has persisted over a period of time, and that's what is giving concern to this rise in inflation and the exchange rate. So now, last week, some of you who have a keen eye may have seen that the kwacha regained some of its lost ground, in particular on Thursday afternoon. This continued into Friday, Monday to today. Now, what are the factors that have brought this about? I refer you to the point made at the beginning that this decision we are making here is in addition to the earlier decisions we made. So the earlier decisions are beginning to have an influence on the behavior of players. By tightening the kwacha availability, because what it is that at whatever level the exchange rate is, there is an exchange of two currencies, kwacha and the dollar. So our actions are kind of adjusting the availability of kwacha. So by tightening, as we are doing, we are making the kwacha less available. Now, what that translates is to moderate the demand that is in the market. Now, some of the players, they don't have money of their own. So they go to banks to borrow the money that they want to use to acquire whatever they want to acquire because they have a proposition to the banks to make. Now, we have two sets of players here. They are what we call onshore, which include you and I. And we have other people who play in our market who we refer to as offshore players. All these are keenly looking at what is happening in our market. So what we observed last week is that because of the tightening of the kwacha, they could not easily raise the kwacha part. So they had therefore to bring in some dollars to meet their kwacha obligations. In so doing, they augmented the supply of foreign exchange in the market, and that helped to move the exchange rate in the direction that we have seen. We have seen too, from the expectation side, that players are very expectant of meetings like this. So they take positions based on what they think the decision of the MPC will be, and then make adjustments to their positioning as to how they play in the market. Another factor which came out, you may have seen, you are the media, that there is a solicitation document which was put out to the bondholders to close that restructuring negotiation on the bondholders. So that is giving the expectation that this matter will no longer be an issue. So that matter is still playing out, but once others said, okay, now looks like we are moving forward. So those combined have led to this development that we have observed. As people charged with the responsibility of looking at, seeing what we are seeing, we have to take advantage of that by consolidating that gain. It wouldn't be prudent on our part to just let that go without augmenting it. So part of the reason to raise the policy rate is to augment that process, because that's what people are expecting. This is going to be the case. Now, with appreciating of the exchange rate, we may see the moderation As you have noted, you reported following the declaration of the national disaster and state of emergency, we are in need of food. Significant amount of that, which we have to pay in foreign exchange and get kwacha to buy that foreign exchange. So that is another factor to take into account. So the point here we are trying to make on this slide is that, yes, we did support the market, but our reserves position still remains about where it was the previous quarter, at 3.9 months of import cover, which is in dollar terms 3.6 billion. Now, this sometimes you may see, just to preempt that going forward, that you may have a lower quantum of reserves, but the import cover may be high. You may wonder now, why is that? Well, the point is that what goes into determining the import cover is the prospective imports. So if there is an expectation that imports will come down, then that figure would be higher, the number. So what we are showing here is that we have $3.6 billion in gross reserves. Now, we also are sharing with you, because we have heard this question many times, that in the first quarter, the gold purchases amounted to 10.6 million. Now, if I may just explain a bit here, that sometimes people say, no, why don't you just buy gold, go and do that. It doesn't work like that. The gold that we have to buy has to be of a bullion standard. And by that means it must be monetary gold. So some of this gold which is circulating may not be of that standard. Now, if you buy that, which is called dore, you need to process it further, refine it further. So there are logistics involved in doing that. And nowadays, too, there is a keen eye on identifying the sources. I'm sure you have heard the notion of fair trade. This applies a lot in gold trading. People who are trading in that, they want to be assured that this gold was not from a source that used child labor, that used forced labor, that violates certain covenants. If that turns out to be the case, since you don't have your own refinery, these refineries will not take it. Because when you have it processed, it has to have a stamp where it is processed and where it is sourced. So if you can't satisfy that requirement, you end up with the gold which is not of monetary standard, and then it wouldn't count as part of your reserves. So I thought it's important to explain that, because sometimes people just say, no, go in this area, buy. We don't have a refinery. When we get that, we have to have it refined, and there are not many refineries around. Credit developments. What we see is that there is a slowdown in credit in the market, particularly credit to government, which is important in terms of crowding out, which we have been talking about. Now, we have had questions in the past where I said, well, isn't it self-defeating that you are raising policy rate and then expect this to happen? It's a trade-off, as we have said. If we don't address inflation, it affects other things more. Yeah, so it's a timing issue to some extent that when we are doing what we are doing, the expectation is that there will be adjustments so that in the period ahead, we'll be able to have a stable financial system so that interest rates can begin to come down. So they'll start out by going up, but once other things settle, you should come, if inflation comes down, you should be able to get interest rates which are lower. But if inflation is going up, you rest assured banks will be moving their rates up because they don't know where the things will land. So it will be like perpetual chasing a rising interest rate. That's why we are concerned about inflation, because with inflation down and at stable level, then you can have interest rates that are reasonable and affordable. So I thought it is important for us to stress that. Economic activity. This, unfortunately, is another very difficult year. What we have observed, earlier projections of growth for the year were quite encouraging. But here comes drought, which is affecting agriculture production, notably food. It's affecting electricity generation. So that has resulted in the revision downwards of the growth projection. So now we are seeing growth being projected at 2.3% from 4.4% last time. So this is what the chart on the right is trying to do. There are different groups that are making those projections. You can see that they are all showing that it's not going up, but it's coming down somewhat. So this is the challenge, another challenge we have in the economy to get growth. Then again, you may say, well, what you are doing, isn't that going to hurt growth? Yes, in the short term, there is that expectation. But again, if we don't address that, then it means the macroeconomic environment will not be stable and the growth will be affected negatively in the period ahead. Most importantly, too, you find that if we don't deal with this, we'll find that investments in productive lines in our economy will not be undertaken to the extent you would have expected to be. Because everybody will be looking for that type of business which gives quick returns. But to get the economy growing at a sustainable level, we need areas of production which are of a longer term nature. So these are the trade-offs that we have to strike as we try to navigate the economy forward. Conclusion. So once again, the committee decided to raise the policy rate by 100 basis points to 13.5. It's still below the level of inflation. So others who are thinking we are not bullish enough will still come and say, no, you didn't do much. But we did what we did, taking into account the other implications of this action. So we had to strike a balance on bringing inflation down, getting the exchange rate under control, but not to the extent that once we increased by a huge margin at the same time, we then have other problems to deal with. So while solving one problem, we create a larger problem that we can solve. So having done what we have done, the expectation is that other players structural reforms, structural measures have to kick in to drive the other desirable changes that we need to have in the economy. So this is one tool. It can't do all the things. We need a combination of measures, fiscal, monetary, exchange rate policy, structural generally, to really address all the different challenges that our economy is facing. So from our end as a monetary authority, given the mandate that we are given of price and financial system stability, this we think is what our contribution can be at this point. We remain vigilant to see what is going on and stand ready to make adjustments as circumstances permit. So for now, this is what we have done, and we believe that it will help in arresting some of the pressures that we are experiencing in the economy. And once those are reduced, they should spur other activities in the economy. I thank you. God bless.
Thank you very much, Governor, for that presentation. So there you have it, monetary policy rate increased by 100 basis points. At this point, we are going to go into a question and answer session. But before we go there, I would like to acknowledge Mwebantu for giving us a live feed on your Facebook page. Thank you very much. So we're going to take 3 questions at a time. Please ask one question so that we give chance to everyone. If you have more than one question, we can get your second and third questions after we have given everyone an opportunity. You will recall that in the last session, we only had about 2 or 3 people that asked. So please ask one question, be brief, then we'll go for the second round and you'll be able to ask your second question. So who will be the first taker?
My name is Kalunga Mwape from Millennium Radio. My question is very simple. Prior to this meeting today, we decided to talk to some experts, economic experts. I believe all of you that side are also economic experts. But we talked to them and then they thought to say it's unwise for the Bank of Zambia to raise a MPR today, of which you have done today. And the suggestion is that you need to have a different strategy in terms of addressing this inflation, because the only strategy that you seem to have is raising the MPR, which is somehow affecting activities in the economy, among other things. Should we believe that maybe you do not have an alternative apart from just raising the policy rate? Or maybe you can share with us what other mechanisms you are trying to explore to ensure that you arrest this inflation so that the borrowing rate doesn't continue to go up. Thank you very much.
Good afternoon, Governor. My name is Cecilia Chilwa from Money FM. I would like to find out how much has been raised from the export proceeds tracking framework and what impact the framework has had on the economy since its implementation. Thank you.
My name is Gerald from Financial Insight Zambia. So, Governor, my question is in regards to the interbank lending rate. As Financial Insight, we've been observing the movements in the interbank rate, and it's averaged about 18% from the time the Bank of Zambia raised its policy rate in February. And the premiums really have averaged somewhere around 6% from the same period that the Bank of Zambia raised the policy rate last quarter. So we want to find out really when the Bank of Zambia really expect the divergence really to begin to shrink, and when we expect convergence, at least in the premiums between the interbank rate as well as the policy rate, considering really the considering the board's role in ensuring really financial stability, as well as ensuring that there is volatility really in the financial systems. Thank you.
Thank you, Governor. I think before we take the second round, you may respond to those.
Thank you very much for those questions. And indeed, there are other experts outside the Bank of Zambia. We don't pretend we are the only ones who know that. But then what you have also to appreciate is what really is monetary policy good at? What can it do? Monetary policy, as things stand, is by and large a demand side instrument. That's where you get these instruments. When you talk of monetary policies affecting supply and demand of money. So as yet, we have yet to have somebody who come up with a tool which is really from the supply side per se. Now, the policy rate, which is being said, it cuts two ways. If we raise the policy rate, that means we are tightening. When you reduce it, you do the opposite. So that very rate is a double-edged, so depending on how you use it. So I don't know who you are talking to, how they look at that, because that's what we know the policy rate does. So now, the reason why we use this is a framework that we have done. In the past, until 2012, we used to do monetary aggregates. There are some countries which do that, still do that. But for us, we observed that the transmission mechanism, that is, when you adjust that term as reserve money, it doesn't really result into something you expected to happen. Why? Because the structure of the economy changed. By that, we mean that now you have lots of other forms of payment. We have digital payments, for example. That wasn't the case previously. And when you adjust reserve money, you had that impact that you expected. But with the emergence of these other ways of making payments, you no longer needed that channel. So we had to change to this intermediate target, which is the interbank, which is this policy rate, which is linked to the interbank, which is the second question which was raised. So that's the main tool. And I think we state in our statement that to demonstrate the stance of monetary policy, you look at where the policy rate is. So other people who are using this same framework will actually come to us and says, your colleagues, actually your monetary policy is not tight enough. Why? Just by looking at the difference between the policy rate and where inflation is. In real terms, at 13.5 versus 13.8, the policy rate is negative, is what people say is underwater. But we are alive to the other challenges the economy is facing. That's why we are not ramping this up as much as those who want us to do it that way. But obviously, when we do this, there are those who have issues who say, no, you are hating. Now, if we reduced with the exchange rate running up as it is, we issue the kwacha for your information. So why are we issuing the kwacha? We'll come with the other measures to deal with that, which is your other question. But the point is that the policy rate is the main tool we have chosen. We also use other tools such as statutory reserve ratio, but sparingly, because that goes directly to affect the balance sheet of banks. It's a blunt. That's what we want to talk. But the policy rate is really where there is intermediation, which unfortunately we have seen, even when the policy rate was raw, were not as high. We demonstrated last time, we gave you a chart which was showing the loan to deposit ratio was very low. So that was happening even in times when the policy rate was low. So which means that there are other issues going on which we must address. We have talked about the fiscal consolidation. Some progress is being made there. When you have the fiscal balance out of line, that means agents have easy recourse to that money. We are seeing people investing in government securities. Good for the government to get money, but it's a double-edged sword in that that money is no longer available for investment. It's taken somewhere else. That's what we call crowding out. So there are so many things which are going on in the economy, but you have certain tools, they can work in a certain way. Now, what else are we thinking? Well, we are looking. One, this economy is quite dollarized. Many people are seeking refuge into the dollar. You know, it's take these people who own, as an example, rental properties. They will ask you to pay in dollars. They will quote you in dollars. But this is a domestic operation, which means that now, even for domestic operations, dollars are being demanded. So that adds pressure to the demand, and that is not accompanied by increased supply. So one of the things we have observed, in fact, we have already set in motion, some of these players who have dollars, they actually use that power to wrestle a better rate even in circumstances when they could get what is advertised. Some of you recall, some time back, what we used to produce on our website were exchange rates that the bank strikes 3 times a day, 9:30, 12:30, and 15:30 hours. But in a bid to provide more information to players out there, we started publishing also the retail rates, bank by bank at those times. Why did we do that? We did that with a view that you, as a customer of the bank, you should be able to see which bank is offering what rate. We did the same on the interest rates also, so that you can shop around where you can get. But what we have seen is that some of the players and the banks, because they are in need of those dollars, they are no longer playing or transacting at the displayed rates. Dealing in foreign exchange is an authorized business. Not everybody is a dealer, but we are seeing a situation where everybody wants to present themselves that they are dealers. That's not correct. That's not right. What about those who are registered? They go to great length to satisfy the requirements to be a foreign exchange dealer. So that aspect we are looking into. One of the things we will be insisting on is that if the rate is displayed within a quantum, say up to $1 million, you should be a price taker. You can't come and start negotiating and say, no, give me a better rate. Then the market is not functioning as it ought to function. So that information then which is displayed there is of no meaning. So that issue, just as where you raised it, I think we are working, there should be a Gazette notice to that effect to ask people to observe that. And those who are dealing in foreign exchange, who are not foreign exchange, authorized dealers, get a license. That's what it means. Get a license. You can't just wake up one morning, you start dealing in that, which is a regulated service. So that's one thing we are looking. The other thing we are examining, will come to the market, is this same thing we're talking of pricing in dollars, quoting, paying in dollars. This dollarization is blunting even this very action that we are taking here, if it goes to extreme. So that also we have to deal with it, but we'll come to the public and debate this and see where we go. So then we see too that there's no limit here. When you want to buy something, you go with a sack of money to buy even a house, cash. Some even pride themselves, and me, I just deal in cash. That's not right. We have mechanisms to pay for that. So we are looking into that as well, because in other settings, that is not happening, that you can't buy a house, you can't buy a car going with the cash. You must pass that through the thing. So we are working with other agencies to see how we deal with this issue, because we note that a lot of currency is in circulation in that mode. We see tax evasion happening by that act. We see people, when you go, you want to buy something, they will tell you, well, do you want to swipe? No, the machine, either if you give me cash, the price will be low. Now, have you ever asked why that is the case? Most likely, one, they may be avoiding to pay the fee for swiping, or they actually may be avoiding to pay tax. All these, that's why ZRA is working on the smart invoice, so that we can plug some of these loopholes. We want things, but we don't want to pay for them in the right way. So these are some of the things that we are working on, in addition to the traditional monetary policy instruments. So I don't know, I wish you could bring those colleagues you are talking to, we engage also with them, so that we can understand where they are coming from. We are giving you the basis for our decision. We would also want to see what is their basis for their decisions, because that way then it will be a fair exchange of views. We have given you today this material. There is a statement which you read, but those who are making those comments, let's engage. We are available, in short. So, but maybe I went too long on this one. Dijo, can you help, or is it, we have Angela here on the EBOP, and then Isaac can help on the interbank rate.
Thank you very much, Governor. On the export tracking framework and the EBOP, I think the first thing to say is that it was launched in January and it is working well, but it is not yet complete. And what do I mean by that? The electronic balance of payments, what we're calling the EBOP, and the export tracking. So there are two systems which we are basically operating. The first one is really what gives us information based on how you transact with your commercial banks on all outflows and inflows into the financial sector. The second is really trying to give us a better sense of how are you using, for those who export, those exports of yours. And the way we're doing that is to ask that you bring back your export receipts into an account here. And as you bring it into your account, when you transact out of that account, we have information again about what's come in and what's gone out. So most of the banks are now operating on that. There are a few where we are still not getting the full, they're not up and running as fully as they should be, but otherwise most of the banks are there. And so the way in which the export tracking is working is when you export your goods and services, and for now it's the goods side I'm talking about, through ZRA, you get a unique number. That unique number is given to your people who are going to be paying you and transferring money back to Zambia. When that money is coming back into the system, that is the same number which we expect to see, which makes us understand that the funds received with that number are the same which were exported. So what has happened to date is that just on the goods, and remember here I'm just talking about the goods. I'll talk about the aspect where I said that the process is not complete. Just on the goods, up to now we have something like 1.4 billion which was received in the system. However, of that amount, only about 500 million has been reconciled. And by reconciled, meaning that we know that these goods were exported in trade, they have come back, and those two numbers reconcile, and we know the funds have flowed in a complete way. So that's an issue which we are addressing with the exporters and the banks where we see that's a problem. So it means that there's not full explanation of the reconciliation of the receipts were received. So that's one area where it's a work in progress. The second is on the quantum of the receipts themselves. Because if you look at just from the trade side, you are getting a number of exports of around 1.8 billion. So clearly there is also a gap there. Now, part of what we've discovered is this is related to some of the exports which may be coming through neighboring countries. They come in bond and then they're exported from Zambia. They are treated kind of the same way. So internally, the teams are now building the systems for us to be able to differentiate that information so that we have better information. The second aspect of needing to complete the process is that it doesn't yet cover services. So again, the system is being developed so that we'll also capture the export of services. Right now, we're just capturing the export of goods. The last point which we need to cover is that concern has been raised quite rightly by the public that another area of leakages has been, how do we understand the import side of the equation? Okay, I send money, I'm saying I'm importing goods or services. Did those imports really come into the country? And so we are now also beginning to build a system which is going to look at how we can capture the imports and again reconcile that as well. So that at the end of the day, we want to have, if you like, a 360-degree view of what is happening with our external transactions. Already what I can confirm is that the system is giving us a lot of very good information. I think we've taken the view that we will steadily try and engage the commercial banks and the public in a cooperative way. Because the system is new, we want to have everybody to understand what they're doing. So for example, some people say, I didn't quite know how to classify things and so on. So we're carrying out sensitization and we're trying to make sure that we can understand that. But it should be no doubt with anybody that this system is here. It's going to be expanded in the ways I've discussed. And if we don't get cooperation fully from our partners, we will be escalating how we make sure we get cooperation, and that is already provided for in the law. But our understanding is first, let's engage, let's educate so that everybody's on the same page. Thank you. Oh, the OLF. Well, perhaps what I would say, in a way, I would tie it to what the governor mentioned, but the first point is it's a good question and an important observation. The first point I would say is that the impact of what you're seeing is that in many ways, the monetary conditions are significantly tighter than what necessarily would be implied by just looking at the policy rate. And obviously this arose from the impact of us raising the statutory reserve ratio. If you look at when the statutory reserve ratios was initially raised and now, I think it rose around 20 or a bit above that, and so it has been coming down gradually. Now, it is true that the framework for us obviously will be that we want the interbank rate to be within the corridor, and that is achieved by financial market operations in which we provide kwacha. These measures, the current basis of the overnight rate being outside the corridor, really must be related to the broader context governors raised, that we are using a whole range of measures to make sure that we can address the issue of inflationary pressures, especially those coming through the exchange rate channel. So we are seeing a gradual reestablishment, a gradual drop in the interbank rate as the banks readjust their balance sheets. But overall, we have basically decided and made the determination that we need to maintain conditions as they are to address the current challenge which is there. Thank you. I don't know, Isaac, if you want to add anything. But
Not really. I think he said it all. Thanks.
Thank you, Governor. So before we take the second round, let me just take three quick questions from our online audience. Then we'll come back into the auditorium. So the first question is from Oliver Izukanji Simumba. And he's saying, what is the central bank's assessment of mobile money's impacts on inflation as a transmission mechanism? What is the central bank's assessment of mobile money's impact on inflation as a transmission mechanism? The second question is coming from Tepwanji Siame Choka. And the question is, are you looking to explore derivatives, seeing we purchase oil in dollars? Can't we explore that option? The third question is coming from Timothy Mwale. And he's saying, how is it that there is sustained demand for the foreign currency without a corresponding increase in supply? Ideally, the sustained increase in the demand for Forex should result in activities in the economy. For example, we expect the corporates to demand Forex when there is economic activity. The question is, has the central bank considered that we may have leakages in the Forex demand? Is the country suffering from externalities that do not reflect economic activities? Governor, you may take those three questions.
Thank you very much for the questions. I think that's a tricky one that you have raised, the transmission mechanism on mobile money payments per se. But the bottom line is that anything that is in the financial system is a mechanism through which monetary policy works. So those are giving us the channels through the decisions we are making here move. So, we have payment systems department which license these institutions. Now, what happens is that there is actually a link, just maybe you have forgotten, that for you or for the payment system operator to operate, there is a linked account in the banks. So they create electronic money based on the balances that they have in the bank. So last time I think we did even announce that money does earn some interest, and we apportioned it that the owner of the money who gets 10% as an incentive. Then we have those who mobilize, they get 30%, and 60% is supposed to be for the development of general infrastructure. We drew onto this during the COVID. I think we did announce when there were issues of the sanitizers, the masks, we drew in from that pool. That was before we made these rules. So in short, what I'm saying is that these are all linked to the banking system. They don't operate in isolation. And this is the mechanism actually why we are pushing go cashless, is precisely because of that. But now what tends to happen is that even among us here, you don't transfer electronic value to other players. What you do is you cash out, you get the money and go use cash. That then provides a break in the whole system. So what we are pushing now is for straight through, so that you can transfer electronic money throughout rather than break that chain. Then it will be much, much stronger. we did launch recently, I think last month, 25th of April, our strategic plan. And it's one of the things we are looking into, the strengthening transmission mechanism. But the whole idea is to transition people who are in informal to the formal through those channels. So I can't give you a figure that no, this is, but definitely it is assisting the way monetary policy works. So we'll be improving on that to get the exact details. Then derivatives, very interesting question. I don't know if DGO want to try this one.
Maybe just on the mobile money, just to add a point, I think Governor raised the question of the trust funds and how we are allocating them. I think we have recently approved for working with the Payment System Association for them to use part of that money as part of their sensitization, so that's important. The other aspect of mobile money, which perhaps is important to add, is that, of course, it's been used to push financial inclusion. And like all things which are good, there's always a good and a bad. One of them is that people can move around funds probably a lot easier than they could do before, and sometimes they can react to economic prices then a lot quicker than they could before. So we think now, if we just look at the foreign exchange market, for example, we can see for sure that because people can use online platforms, when the exchange rates move, you can see people moving in and out of the exchange rate a lot easier than they could do before because they can do it from their home. And this brings to the bad side of mobile money, which is that as long as we have this leg Governor is talking about, where at some point we're not all using electronic money on the paying side, we're getting out cash. Of course, there are other things which can happen then because of that link, which are associated with perhaps economic activities we wouldn't want. So those are all things which we need to push at. I think on the derivatives, maybe the point we should really ask is who should be using the derivatives and why? As you will appreciate, the central bank does not import oil. In our transactions, typically we are mainly working with the commercial banks. There is a space within commercial banks where we would use derivative products. We are introducing swaps, for example, in the FX market and in the local kwacha market. And there may be other products like that. But for the importation of oil, of course, we are constantly asking and engaging the commercial banks to be more innovative in the way in which they can serve their clients, those who would be importing oil. And that's very important. And to do that, one of the things we're trying to do is to try and get master agreements agreed by all of the banks, firstly between ourselves and the banks, which enable them to, and these are the ISDA agreements and others, which basically enable banks to trade with security that if something goes wrong, they know where the legal liability lies. So we're trying to encourage that, and hopefully that will also help the commercial banks and others to use derivative products in their day-to-day activities.
The last one was on the why there's this mismatch between supply and demand, and we are wondering why demand keeps rising but supply is not following suit. First and foremost, there are different players here in by and large. You can find in some cases the one who generates foreign exchange also of course uses some of that foreign exchange, but the excess is what they sell to the market. But there are more demanders of foreign exchange. I think if I was to take a poll here in this room, I would be hard pressed to find a foreign exchange earner. But we are all looking for dollars. We are looking for rand. We are looking for euro. So where that comes from, it's really not sometimes any of our concern. As long as you get it, you have a bureau here. Most of the bureau, they don't generate money of their own. They exchange what they buy from somebody, sell to somebody else, and they go to the banks also to buy. But where do the banks get them? From their clients who are exporters. Now, have you not wondered when the most audible voice is that of importers? When the exchange rate depreciates, the first speaker would be an importer because they say it's the same. But if you flip it the other side, there's an exporter there who actually is benefiting from the depreciation of the currency, because it means that for every dollar that they bring in, they get more kwacha, which means that their kwacha obligations can easily be met. But they are not very audible. Have you heard even a meeting of exporters? You know, there are not many. That's why we are encouraging, when we are talking export diversification, this is precisely the issue that we are trying to encourage, that there be more players in the export market as well, so that we have. This is why we introduced what Dijo was explaining here, the EBOP, the export tracking, because it was also becoming difficult to know who was earning what. You know, what we were seeing is that when you look at the balance of payment statistics, the other items net was bigger. And yet other items net should be for those small items you are not able to classify, or they are too small, so you group them together. But now if it becomes the bigger number in the balance of payments, then it's a problem, because an allocation mechanism is lost. So this is why we introduced this, so that we can see clearly what these exports are, in what area, and so on and so forth, their quantum. So the point is that there are more demanders of foreign exchange than there are suppliers. So that is likely to continue to be the case unless we have more people going into export. And the government has actually given incentives to those who go into the export market. The tax rate, corporate tax that you pay, is lower for those who are exporting. And there are exemptions also on importation of certain machinery. So, but it seems a lot easier for people to go in the import. Many of the products that you see on the street, they are imported. What? The cross-border traders, they get dollars, they get rand, they get other currencies to import those things. So that's why you have this challenge that we have. So there's no compulsion that now they have to be exactly the same. But that's what we are pushing. That's why there are these incentives to actually to try to get to a point where exports are far more than imports. You see in the statement, we are talking of the current account balance being under pressure because there are more imports than there are exports. So that's a challenge that we have to address. And that is not addressed by monetary policy directly. It's for individuals who are inclined to go into that market and be exporters. Right now, we don't have many people who step in that space, and demand then is outstripping the supply that we have. I hope that, you talked of leakages. That's another, because that's now demand. Is when you're speaking of leakages, it can happen also on the supply side. This is why I think we are talking over there. The export tracking and EBOP is to try and reduce those leakages that may be going on. But individuals are smart. They have different ways of doing these things. So we have to constantly up the game. That's why you have also anti-money laundering issues coming into effect. That's why there are limits which are supposed to be placed on how we deal. I'm sure people complain that, no, the US, they say, no, they're $10,000. It's not a restriction. It's just that if you are moving with the 10,000, report. But some people misinterpret that, no, it's a requirement. But you will not find the people transacting big money just like that. Here, you want to go to a bank, you are externalizing $10,000. You don't want questions to be asked. Where are you taking this money? Now, we improved the technology that you can describe in full where you are taking this. That is very important. That's why they have all these STRs, what we call the suspicious transaction reports, which FIC gets. But when you use cash, you bypass these things. And that's what we need to address, because that is hurting the economy.
Thank you very much, Governor. We have under 10 minutes to go. So those with questions, please make them brief. This is the last session. Brief and just one question. Can we take all of them at once, Governor? We have run out of time.
Taonga Mitimingi from Bloomberg. I just wanted to find out how many percentage points is the drought contributing to food inflation? I do note that you belabored to explain the impact of drought. I just wanted a figure. Thank you.
My name is Munyumba Mutwale from the Business Telegraph up here. I wanted to just finally ask Governor what your outlook on interest rates are, because we're getting interest rates in different directions here, from a negative interest rate, policy rate, which you've explained as to why, but we have a secondary bond market where interest rates are declining, but a primary bond market where interest rates are still staying highly elevated, and an interbank rate that's way above the policy rate. I wanted to find out what's the outlook, and just to try and lean into this, how sustainable, given this economic situation, is it going to be for the government to also keep the rates suppressed on the auctions, because they're keeping, you can see that they're rejecting higher interest rates. How possible is it for them to continue given the financial strain that they're going to be facing now?
My name is Wumba Chimbulu from the Daily Nation. Governor, I'd like to find out how far the bank has gone in developing cryptocurrencies. Thank you.
Good afternoon, Governor. Gerald from Financial Insight. So my question is on the preservation of wealth. The central bank forecasts a reduction in the inflation in the medium term. Your target remains 6 to 8%. So how achievable is this, and what really are your comments on the preservation of wealth in the T-bills as well as the bond market, considering that a cooler inflation really is what is needed? Thank you.
Prudence Chota from Diamond TV. Governor, in your presentation and in the responses that you've been giving, I know you've indicated that there is so much demand for goods outside there than we are exporting as a country. And among some of the reasons is the fact that some of the goods we are producing here, the cost of production is quite high compared to outside. We have the energy crisis, high fuel, which has prompted the cost of production to become high. We see almost every week organizations are laying off people. If you do watch media, almost every week we are receiving complaints of people being laid off, which brings me to the question. How are you as a bank expecting Zambians to start producing and exporting when the cost of borrowing is high? In countries where industries are thriving, those are countries where the cost of borrowing is low. But how, Governor, are we going to take part to produce, to export, if at all the cost of borrowing is high? You've talked about agriculture, where you were saying vegetables have gone up. Personally, I've got a small farm. I was thinking of rushing to go to a bank and get a loan. But looking at what is happening, I've decided to step back. I might not be the only one, but other more people who would want to grow vegetables by drilling that borehole, but I can't because the cost of production is high, because loans are expensive. So how are we going to produce if at all our cost of borrowing remains very high? Thank you.
In the interest of time, please, just one last.
Good morning, Governor. Alex Yanga from Zambian Business Times. I just want to find out on the currency state of the gold reserve build-up at the Bank of Zambia and the projection for this year.
Any other questions, we may take them offline. Governor, you may respond to those.
Thank you very much once again for the questions. Tawonga, the percentage points, the contribution of drought to inflation. You know, there are different ways to look at the food. We can, their first round, second round. Now, what is we are doing now, when we are seeing inflation, we have given you where the pricing is. We are saying that the price of these commodities are going up, and that's calibrated into that. So if you look at that chart that we presented to you today, I think it takes time to see, because that really gives you the percentage contributions of each of those items. We have not calculated as drought per se that this is the percent, but we are looking at what items have moved with this situation. So you may deduce from that by working backwards to see what that is. So this is part of the reason why we thought we share that granular thing that you see what is happening. Because if you see charcoal demand going up, it means that people now are trying to hedge against electricity shortfall. So these are some of the dynamics, but we haven't really, I don't think we have worked out a specific number as such, but you can deduce from that movement that we are seeing. On the outlook for interest rates, Mr. Mutwale, I think what the policy rate is supposed to give you is what we are doing here is precisely trying to give you a guide where we are thinking these things would be. But obviously the reality is different because there are different factors which are at play. So ideally from our end is that the policy rate becomes the anchor rate. That's the whole idea. But we are not yet there, we recognize that. So in the fullness of time, that's what we want to see, that the deviations from the policy rate are reasonable. But right now, because one can go in the government paper, although you say that there is this suppression of interest rates, that's part of the deal. Why, if the government was to take each and every bid that comes with, irrespective of the cost, then these will keep going up. And then you find that the crowding out will even intensify. So the idea is that the government has got a budget and it has to be guided by that. So it can't just take each and every bid that comes. If it is way out, then that's market discovery, price discovery. You know that next time this won't be successful. It brings some discipline. So generally, that's what I can say, that our idea is to get to a point where the policy rate has that impact on the interest rates. Then quickly, Bumba, on the cryptocurrencies. This is an evolving issue. We haven't, it's not us creating them. There are people out there who are doing it. In fact, there is a whole movement now to try and see how we regulate that market. So far, if you noticed, we have not really given any indication. What we have is a restriction that if you want to do that, you are on your own. Okay? But things have evolved. There's a general, in fact, next week we'll be having a meeting where we are looking how different countries are positioning on this. So even us, we are positioning ourselves how we can regulate. But we have the sandbox arrangement where those who want to do this, they can come here. But we know there are some young people who are already dealing in those things, but it is not our issuance. They are doing it on their own. And if you are a victim, that's really, you are on your own at this point. But we are moving towards getting a framework to regulate that. Then this issue of wealth, is the 6 to 8%. Remember, a target is where you want to go, right? So this came out of looking at what is a reasonable rate of inflation. So we have to keep fighting to get to that level. That's why we are doing what we are doing today, is to move towards that. In the process, we know, or we come to know, some of those factors which are keeping us away from reaching that target. And that's why collectively we have to work on those, because that is the good place to be. Inflation is a thief. As you said, it really erodes your wealth. You are sleeping in the night, you wake up the next day, your money can't buy much. That's robbery, isn't it? So we must address inflation, because if it gets to that level where it is hyper, the time we are seated here, you go out, the price has changed. You can no longer have prices determined in advance. Let me quickly, Prudence, very spirited, and we recognize that. But the countries you admire that have managed to come this, they also went through these tough times and got to the point where they are today. There is no single country that I know of in the world which just cruised through and got everything that. There are hard decisions that have to be made. Yes, and now it's even more difficult, you see, because with the globalization, what we are doing now, already this information has filtered to others. And they are saying, oh, in Zambia they are doing this. So policymakers are under constant pressure to do these things. But what we are trying to do is that we must have some orderly way. This is why we are giving you this. The idea is to get to what we are talking about. But before we get to there, there is a rough road that we have to traverse. But persistence and the consistent way of doing this will get there. That's what I can tell you. But now you may not believe me, but if we continue doing the right things, one day you even wake up and say, but why were we like that? It was happening this way. But it's among us here as Zambians to do that. Certain things which we do make things difficult. You borrow money from a bank, you don't pay. So the other people pay the price for that. Because now the fact, you saw when the government was running deficits, what was happening? The price of goods of government were higher than they should be. So people price that in, and that comes to hit you as well. So these are some of the things that we have to deal with as a society. How do we want to move forward? But there's no easy way. Maybe you had some.
I think time is up. I think on the gold, it was in the slide, it's 10.6 million for the year to date.
Mm-hmm.
Thank you very much, Governor. So like I said, in the interest of time, if we still have questions, please feel free to forward them to the communications division. I'm sure all of you are on the WhatsApp group, so you may contact us. At this point, we have come to the end of the press briefing. Special gratitude to the production team, ZNBC, Diamond TV, Fortress Media, thank you. And for the live feeds that we received from Mwebantu and Zambian Monitor, we do not take your service for granted. We really appreciate. So at this point, I will ask that we be upstanding and allow the governor and his entourage to leave the auditorium. Until next time, thank you very much. Have a blessed day.